What's up, guys? Today I'm going to be comparing Caterpillar Company and John Deere Company, and I'm basically going to pick which stock I would invest in if I was to invest in one of them right now. I do not hold either one, but I think with Trump in office right now and the economy growing, there'll be a lot more trees getting knocked down, a lot more agricultural needs from Deere Company or Caterpillar Company. So anyways, I'm going to go ahead and cover some value things and one growth, which would be the revenue growth. So here we go. PE, Caterpillar has a 27.25, Deere has a 22.5. So right there, John Deere is a better buy in terms of PE. Price to book ratio, you have Caterpillar at a 5.57 and Deere at a 4.48. If you don't know, price over earnings is basically a PE. PB would basically be price over like equity because it's book ratio. Then we have PS, which is price over sales. And by the way, John Deere won that one too. The price over equity or price over book ratio. So price over sales now, PS, you have Caterpillar at 1.64 and John Deere at 1.33. So obviously the lower is the better one. Once again, John Deere wins. So in terms of a value buy, John Deere does seem to be the better company. Then when you go to the debt to equity though, you have, once again, the lower the better. You typically want like 0.5, but depending on which sector of the market you're investing in, a higher number can be okay. 1.58 for Caterpillar, pretty high, but then John Deere has 2.58 debt over equity, so that's really bad. I was like, wow, like that's really high in my opinion, but I don't know. It's a better value buy still, though. It wins in more categories over Caterpillar. So I guess that would just be, are you comfortable with them having that much debt or not? I wouldn't be that bothered by it. It's a pretty old company. So, but anyways, go down to the revenue growth now. They both had about a 28%. Deere had 28.6% and Caterpillar had 28.3. So Deere did have 0.3 more, but I mean, that's 28%. So yeah. Right now, right off the bat, I can say I would definitely invest in John Deere over Caterpillar, but I wouldn't say no to possibly investing half money equally into both. So if you're going to get like 8 shares of one of them, just get 4 and 4 of each or something. I think it would be a good diversification because there are a few things that Caterpillar just does different than John Deere, and I feel like that makes it more unique. But however, John Deere has more control over like certain environments, like they're going to get more revenue because they're more like well known. By the way, the market cap of Caterpillar is actually higher, 83.2 billion compared to John Deere's 46.6 billion. I always just like to throw that in just as a comparison because when one's like almost double higher, it's like that's really interesting to me. The price target, John Deere has a 24% gain possibility, which would make them about at $178. And Caterpillar has a price target that would get them at 168 with a 21% gain. So once again, John Deere wins in the price to target, and the not price to target, price target. So that's basically the price that they expect it to be at by the end of the year. And yeah, so that's pretty much it. I would choose John Deere, but if you're one of those people that likes to make a portfolio rather than a couple stocks, I wouldn't say no to Caterpillar and Deere as well because I would probably have a separate account where it would be Caterpillar and Deere and then one more where it would just be Deere. But yeah, thank you so much for watching. This was Feeding You Information, and I'll see you guys in the next one.